Hello traders and welcome to another video review. Today is Tuesday, August 3rd, 2024. Let's find out what's going on the economic calendar today. We got some data overnight published already. BRC retail sales monitor from the UK beats the expectations of 0.3% with the actual number of 0.8%, and the current account in Australia shrinks even lower from minus 6.3 billion Australian dollars to minus 10.7 billion Australian dollars. CPI data and GDP data from Switzerland and Hungary and Turkey are scheduled for release between 8:30 and 9 o'clock. Then we got some data from Spanish unemployment change, and German Vice President Buch will give a speech at 2 o'clock. The key event of today, ISM manufacturing PMI data from USA is scheduled for release at 4 o'clock. This time, manufacturing PMI is expected to increase from 46.8 point to 47.5 point. Global dairy trade price index from New Zealand is scheduled for release as well at 4 o'clock. And then we got some comments from the ECB Supervisory Board member Jochnik. Atlanta Fed GDP now is scheduled for release at 5 o'clock, and then at 6:45, German BUA President Nagel will give a speech. So only one of the very important event for today is ISM manufacturing PMI data scheduled for release at 4 o'clock. So this might add some volatility to the markets overall. Otherwise, we got very calm day ahead of us. So let's start with the technical part. We are going to first take a look at Bitcoin. So first we are looking at the Bitcoin. That's the reason for that is that the Bitcoin is developing the downside movement, and just recently we bounced from the new local low located at 57,117 towards the 100 periods moving average on a 4-hour chart, but the shooting star again was made here. The shooting star was made again during the last bounce as well, just roughly around the 100 periods moving average. So it looks like every bounce on a Bitcoin is being used for the by bears to push the price lower, to cap this these movements to the upside, and make a pressure on the bulls, of course. Local high 59,809, and right now it looks like we are developing a confirmation of this shooting star pattern. When we break back below the local trend line and 50 periods moving average, the next target would likely be somewhere around the level of 57,117. That's the temporary low and the technical support. Any breakout below this level opens the road towards the level of 56,247, which is the next technical support. So please stay focused with this current developments on the Bitcoin. As you can see, we still are looking for lower prices because there is another impulsive cycle to the downside waiting to be developed soon. Let's now take a look at the euro dollar to see what is going on the majors. And the euro dollar, as you can see, is as well expected to drop lower. Right now, quite important technical support is being tested 1.1050. However, as you can see, we got this 5 ways to the downside done. Now the question is whether this extremely oversold market conditions and the bounce, the recent bounce, which is very shallow to be honest, from this extremely oversold market conditions would add more momentum to the upside movement. It doesn't actually looks like the momentum is being added. So possibly, just possibly, we might have either the extension of the downside movement, which means that, of course, this kind of situation might be happening here with the wave 5 to getting extended maybe somewhere here, and that's even worse for the bulls, because it means that this impulsive movement to the downside will be basically even deeper than it is right now, because it will evolve into fully blown impulsive cycle. right? So that's even worse. And then of course the lower levels will be penetrated, so the market will retrace even more to the downside from this swing, from the lows of 1.0789 to the highs of 1.12, right? So please stay focused on the with the euro dollar. It looks like we want to go even lower here on this market. What then gold is doing? Nothing. Gold is absolutely passive these days. However, we got the trend line test. We got the trend line test. This level doesn't actually apply here. We got a trend line test. This level here might be removed, and we can place our long, more important line here. Technical resistance is now, of course, 2,531. We got this swing to the upside. Now we know that, of course, the time of this little consolidation here is it's a little bit longer than it's supposed to be for the upside continuation. So it looks like we have finished 1, 2, 3, 4, 5 ways to the upside. Now we're doing some sort of the correction, consolidation here. Now the question is whether there will be some spike to the downside and then reversal to the upside and uptrend continuation, or this will be enough to create some sort of the consolidation and pause of the uptrend in the uptrend, and then reversal back on to the upside. Again, we got another test of this trend line here, so that trend line might be very, very important. And of course the technical support roughly around those levels here, 2,488. But let me just add one more level, just one more level for the lows of this 2,470, the lows for the August 22nd. So that's nice zone here. We should see some kind of a bounce to the upside from this zone on gold when it is of course completed. And because there's some data from the New Zealand dairy trade, let me just take a look at the New Zealand dollar. Now we'll switch to the daily time frame chart, and the reason for that is, let me just focus on my chart. Now the reason for that is that we have clearly defined range here. We got very important technical support at 5,835, so we can do this like that. And then we got a very important recent swing high at 6,293. And what it means? It means that this pin bar, kind of a shooting starish pin bar, is directly opposite to this pin bar, or this kind of a pin bar, right? So we got bulls coming in, bears coming in, and then confirmation and extension to the downside. Now the next target for bears is 6,122 and 6,072, where the 150 periods moving averages are. Moreover, we are moving away from the extremely overbought market conditions. We got some sort of the bearish divergence. Now what we need for this chart is actually Fibonacci retracement. So what we do, let me take a look. Okay, that was good. We will take this and we will take something like that. We already retraced 23%. We are waiting for 38%, and the 38% is roughly around 6,122, just where the 50 periods moving average is. Then there's a 50, 6,070, and then there is 61%, 6,017. So it looks like bears want to go lower, fine. They want to retrace some levels, fine. We got this trend line here. Let me make it as orange as it is possible, as usual. There you go, so everyone can see it. We got this trend line here, and maybe we are going to retrace only 38%. That's a nice zone for the bulls to buy. And last time we were here, we got this little pullback and then big spike to the upside. So maybe this time it will be exactly the same. Let's wait what the bulls will do around the level of 6,122. That's everything from me for today. Thank you very much for watching this analysis, and I hope I see you guys next time. Take care and bye bye.